Hey everybody, this is Osprey from mychartcoach.com, and we're going to take a look here at volatility. As you can see here with all the headlines I just showed you, it's been a crazy day. The S&P 500 hit an intraday all-time high. It wasn't a closing all-time high, but hit an intraday all-time high, and then the market started fading into the close when we had the Manafort guilty verdict come out, and then the Cohen guilty plea, and so that sent things heading lower into the close, and so what happened was you had VIX here, futures closing at 1286 with in regular trading, and then now they're up here at 1470. As you can see, there was a big gap up. It's hard to see on this chart over here on the right, but there's been a big gap up in open up here in the futures trading tonight over here at 1470. And so yeah, so we'll be you've got the indexes here that are under pressure, but not very big. They're hanging in there pretty good. I mean, for all in all, with the headlines and everything, the market is still trying to shrug off any kind of White House drama. And so it's still happening right now, even though VIX is telling you something is wrong. Okay, so big spike. The last time that happened back in July, I posted a similar kind of video, and yeah, VIX kind of hung around there. And what needs to happen now is it needs to get above 15. And so if you look here at this VIX futures chart, you can see this is an older chart that I was been working on. And what's happening is it was right here at this green line today on the close at 1286, and that's right where this resistance was before that big breakout that happened back in January when there was the big spike, and a descending triangle pattern has formed. You can see the descending resistance, and then you have the horizontal support here. And so right now the pattern is coming, winding to a flex point, and at 1480 in after hours trading, that's putting it up here. Okay, so that's putting it above the red line. As you can see here, it's been breaking that level intraday, but it's been failing to close above that line. And so if there is a close above that red line and above the 100-day simple moving average at 1446, that's going to signal upside potential. It would have to stay above that level, but if it did, it could possibly work up to 18, back up to that high from back in June. That would be the next big target. Okay, if you look here at VIX on the 15-minute chart, okay, you could see here today it caught our attention. Okay, the headlines were coming in. Whenever you have the headlines about some kind of drama happening, you've got to you look at volatility to see if it starts percolating, and that is what happened. It got above the middle Bollinger Band at 2 o'clock, and that was our clue, above the dotted purple line. That was the first time it broke that level all day. And then when it got above the green line there at 2:30, I put the alerts out. That's the 50 simple moving average. You could see here there was a gap down. This is the bottom of the gap on the 15th, and then the top of the gap is over here on the 16th. There's a space on the chart, and since it gapped down, it has not closed above that green line. And so at 2:30, that's the exact time it closed above. I put alerts out, and so people were able to get the early entry points. So congrats to everybody that caught that alert. And then it did close above the 100 simple moving average. When I put out a VIX futures alert, VIX, that's going to put TVIX, UVXY, the VXX, that's going to put them in play as well. I follow the futures, and then then you can go into the other volatility trades. So if you see VIX heating up, that's your clue. If you're a TVIX trader, now it's time to check that out. Same thing with UVXY. You just need to look at their individual charts, but they do move in unison, even though VIX futures does move a little bit different sometimes. And so it is above that 100-day simple moving average, and so it needs to stay above that level at 1270. And then now in after hours trading, it has it way up here at 1480. So we're going to see if that's where this does open tomorrow. That would put it back up here above the top of the gap. And what you want to really see is you want to see this 200 simple moving average at 1344 turn into support. Notice how that's lining up with the high close here back on the 17th at just about 1380. You want to see it stay above those levels, stay above the bottom of the gap, and then that's going to signal volatility is heating up and it's pushing higher. If it drops back below that 1380 level, and definitely if it goes below 1340, 1244. That's going to signal more consolidation, even though it's going to be bullish if it can get above, stay above this 50 simple moving average and the middle Bollinger Band that are way down here right now at 1235, 1240. Okay, if you look here at VIX on the weekly chart, you could see this descending resistance line. Okay, this multi-month trend here, and so it's coming to a flex point where you have the horizontal support. Okay, and then you have the descending resistance. It's forming this descending triangle pattern. And now the candles are coming to a flex point where either the red line's going to break, and that's going to signal upside potential, or the green line's going to break, and that's going to signal downside risk. And so right now at 1480, look where that puts it. It's putting it above the red line. Now keep in mind, look at the upper wicks in these candles. The key is the close, okay? And so tomorrow is only Wednesday, and so there are going to be 3 more trading days left in the week, so it could easily go above that level and then pull back before the close on Friday and still close below this red line. But if there's a weekly close above that level, that would be the bullish signal that VIX was finally ready to get a run going, finally ready to push higher. Keep an eye on the 15 level. That's a big resistance level for VIX, for VIX, and so if it's trading above, that would be really bullish. Also keep an eye on MACD. There was a crossover on the 8, 13, and 5, and the 12, 26, and 9 is getting pinched. When that crosses over, that's a clue that it's really starting to heat up and that it could break out. That's what happened before the big run back in January. Okay, take a look at TVIX here. Closed up 4.3%. It's been really beaten up. It was way up here at $120 just back in April, and now it was down here. It hit below $30, and so it hit the 29s. And so this has been a huge drop for TVIX. Notice the big volume spike here. Back last week, there was a huge volume spike when it tried to get above that 50-day simple moving average. They locked in gains and pulled it back again. And so now it's bouncing off of this 30 support zone. And today it was heating up with the movement into the close. And after hours, it was trading at 34.51. So that's putting it right below the middle Bollinger Band. That's going to be the key level right now on this chart. It needs to get above 34.77. And so if you see it trading above that level tomorrow, that's going to be bullish. If it drops below 34.77, that's going to signal more consolidation. It needs to close above to get an uptrend going, and then it's going to be all about breaking the 50-day simple moving average at 40. Once that level finally turns into support, that's when TVIX could get a sustained run going. Notice here how the 50-day simple moving average turned into resistance and it pulled back, and so that's going to be a real tough level to break. If it does hit that level, that is the lock-in gain zone until it turns into support. If you look at the TVIX 15-minute chart here, you can see today it had that tight Bollinger Band setup. You can see here where the lower Bollinger Band is this purple line, the upper Bollinger Band is this purple line. They were super tight, and then it broke out to the upside. When it got above this 50 simple moving average on this 15-minute chart, I like that setup. That signaled more upside potential, and once again, it was the proper signal. And so we were on this when it was down here in the 31s, and then now at 34.50. That's a 10% gain just in the last couple hours of the trading day. Loading before the close, and then waking up the next day possibly with a nice gain. That's not too bad. And so congrats to everybody that caught the alerts. It's above that 100 simple moving average here into the close, but what it needs to do is stay above the 200 simple moving average. Notice how they closed it right at that level. That's the top moving average on the 15-minute chart. If it can turn that 34.51 level into support, then you have the bottom of the gap, which is also lined up with the high close on the 17th, and so that's around 34.50. If it can get above that 34.50, it could really possibly run back up to 38. If it pulled back below that 34.50, that's going to signal consolidation. That's the top. It needs to turn that in support to get a big push higher going. Okay, take a look at UVXY. Closed up 3.3% today in regular trading. It had that big pullback, and then has a very similar setup. It's at 908 right now, and so at 908, it's actually putting it above the middle Bollinger Band. The middle Bollinger Band right now is at 901. So as long as UVXY is staying above $9, it could get an uptrend going. What you want to see if you're a bull is a break above the 50-day simple moving average at 996. If it can get above that level, that's when it can get moving. That's when it can run up to 12 and test test that 100-day simple moving average. Now if it breaks above, stays above 9 and it comes up there and it hits that 10 resistance zone and fails to break, that is going to be the profit taking zone. It's going to have to turn that level into support in order to head higher. Okay, take a look at SPX here. Okay, we're going to look at a couple of a couple of strategies that we had here. You've got the S&P 500 large cap that hit an all-time high today. Intraday, it did not make an all-time high close. As you can see here on RSI at 61, it's not super frothy on RSI. It's definitely not. It's had back in the day, it's been able to run above 70 when it was really pushing back in January. Right now, it's been having a hard time getting above 70 and even staying above this current level. Let's see here. Yeah. Yep. That down here where it's at right now. Yeah, it's 61. Yeah, it's topped out here a few times. Yeah, it's the bottom line with this chart. It's all about the fact that it filled the jar. If you take a look here, it came down and formed a symmetrical triangle pattern, and then it broke out and headed higher. When it came up here and it hit this top, it formed it's forming a double top with the previous high from back in January. It filled the jar. You had the downward movement, and then you had the upward channel. And so what it has to do now, it has to bust out of the top of this jar. And so that's currently lined up there with that 2871 level. 2872. What was the all-time high here today? The all-time high 2873. And so 2873 is going to be that big level to break. It's going to have to bust through that and turn it into support to head higher. If it's trading below that 2873 level, that's going to signal a temporary top, and it could pull back. Okay, so this is an older chart. The annotations on here, and this chart was made from back here when it was breaking above the 100-day simple moving average back in May, and you could see there how that was really got going after that. And so it seems like this uptrend could be playing out here, and it could take a breather. It could possibly pull back for a little bit, or could trade sideways. It's going to take a little bit for it to be able to break out higher here. Not sure if it's going to be able to do it under the current circumstances, and with having the earnings season is winding down, and then on top of that, this is historically the slow time of year for the stock market. Okay, now if you look at SPX, this is the S&P 500 on the daily chart. You can see here we've got this inverted hammer forming. Okay, that formed today during an uptrend after a gap up open. And in my opinion, it formed a bearish shooting star reversal pattern. And so this is a pretty strong reversal pattern. When you see a doji or a hammer form during an uptrend, that is your signal that it could possibly pull back. It could signal a possible temporary top. Now, this could just be a pause in the uptrend, and it could keep pushing higher. It wasn't like there was a giant climax spike, but it was a signal that it could pull back. Now what you're looking for is you're looking for EMA4 at 2853 to hold. As long as that level is holding, the chart is still super strong. If it dropped below, that's when it could possibly consolidate and come back and test that middle Bollinger Band at 2837. Okay, if you look here at the SPX on the 15-minute chart, you can see here how it was breaking down into the close. You could see here it broke below the middle Bollinger Band here at 230. That was signaling downside risk, and then it came down to the next level. They always come down to that 50 simple moving average, so keep that in mind. It also hit the top of the gap. There's a gap between low of day today and the high of day yesterday, and so it came down. It did not fill that gap. A drop down here just below 2860 would fill the gap. Right now what it needs to do is it has to hold the 50 simple moving average at 2862. So have that number written down. If you see S&P 500 trading above 2862 tomorrow, that's going to signal upside potential. And then it's going to need to break this 2873 resistance zone. You can see that's the all-time high close on the 15-minute chart. And then then it'll have what we call a blue sky breakout. It'll be uncharted waters. There'll be no overhead resistance. Okay, and so if that fails to happen and it drops below 262, the downside risk is it comes down to this 100 simple moving average at 2853. Keep in mind when they get below that 50 simple moving average, sometimes the momentum keeps them going to the bottom moving averages on the chart. And right now the bottom moving average is down here at that 200 and 400 simple moving averages in the 2840 or 41 support zone. Okay, take a look at SPXL. So this is the S&P 500 bull 3 times, and so today it formed a bearish pattern. Okay, it formed a doji during an uptrend. Okay, and you can see how the gap up open with the doji, and then yesterday it formed a doji as well, and so it had formed the bearish doji star reversal pattern yesterday. You know, that's what Candlesticker was calling it. You know, if you didn't like that yesterday, it definitely formed it today with the doji that formed after the gap up open. These are just signals that the chart's getting a little frothy, a little ahead of itself, that it could take a breather. You know, it's a stronger pattern when the doji forms above the upper Bollinger Band. It's still below the upper Bollinger Band, but it was still a signal that it could take a breather because it is on a 4-day run. And so that set up the opportunity to look at puts, SPXL puts, for a potential pullback. What it needs to do is for that trade to work out would be a drop below the EMA 4 at 51.16, and then we'd be looking for a drop down to that 50 simple, or that 20-day simple moving average middle Bollinger Band at 50.31. That would be the pullback level. You know, if that level holds, the uptrend's intact. If it were to break, then that's when you could see a drop down to the 50 simple moving average down at 48.27. Okay, so we have the bearish doji star. If you look at SPXS here, okay, this is the S&P 500 bear 3 times. Okay, this was set up for a bounce. Okay, it had been pulling back, and as you can see down here, it has this hammer down here. Now the American bulls here called it bearish doji star yesterday. I'm not sure if that was quite a doji or not, but that looked like, you know, pretty much a doji. It looks like it could be a doji. They were calling bearish doji star yesterday. You could call or bullish doji star. You could call today a bullish hammer. You know, you may even call that a doji. Whatever you want to call it. When you see these types of candles form during a pullback, many times it signals a bounce. Very similar to right here. You have a pullback, similar candles, and then it bounced. Right here, similar candle, and then it bounced. Okay, and so over here, you know, you have the similar candles, and then it bounced. And so keep an eye on that. Dojis, hammers at bottom, signal potential bounce. All right, and so right now with SPXS, what you're looking for is a break above the middle Bollinger Band at 23.27. If it could turn that level into support, the target will be 24.37, and then yeah, we put out alerts today that you know, calls would be in play if the market does pull back. And with the setup with VIX, it looked like that was going to be the good trade. Okay, and now if you look at Dow Jones Industrial Average here, ticker symbol INDU or ticker symbol DJIA. It was looking really frothy here today, in my opinion. You know, just pushing really hard here. Look at the white candles. It did form the bearish deliberation block, a reversal pattern yesterday. And so, you know, with having the 3 consecutive white candles in a row, and then today it formed another one. So you have 4 in a row, just kind of pushing here. The charts here are not bearish in any means. They just look like they're getting a little frothy. You know, you've got RSI at 64, which isn't too bad, but you have FASTO here crossing over. Notice how the black line is crossing over the red line, and so that's a signal that it could pull back and take a breather. What you want to see now, it's going to be all about holding this EMA 4 at 25689. If that level were to break, that's where it could consolidate, possibly test that middle Bollinger Band again at 25461. It has to hold that level. If that level were to break, then you could have that 100-day simple moving average back on deck. Okay, so we'll have to see how everything goes with the new tariffs and trade war talks. The China talks are starting tomorrow, so it's going to be a big week. You know, big rest of the week here. Also, Fed Powell speaking on Friday. And so here we have the 15-minute chart for the Dow Jones Industrial Average, and you can see it broke down here. 245. At 2:45 today, that was your signal that the chart was getting, you know, starting to really break down when the middle Bollinger Band was breaking, and then it came down to this 50 simple moving average. It's got to hold 25812. If that were to break, you're going to have the 25,700s on deck. That's what's going to signal. There was 2 billion shares, or $2 billion on the sell side into the close today. And so it was heavy sell action into the close. You've got UDOW here, but futures have been holding up, and so that's interesting. And then you have UDOW here, which is Ultra Pro Dow 30, and you can see here it's got multiple white candles in a row. The gap up open, okay, was yesterday. Okay, it formed the bearish deliberation block as well. The pattern today with the extra gap up open above that upper Bollinger Band, it just signaled that the chart was getting very frothy. You've got the crossover on SDOW. EMA4 here at 100 is going to be the big level to hold. If that was the break, you could see a drop down to that middle Bollinger Band at 97. Okay, anytime you get above that upper Bollinger Band like that, it's a signal that that it's getting a little ahead of itself and it could take a breather. You know, similar to back here where you get the little pauses at the upper Bollinger Band. Okay, and so yeah, so, and finally for this very long video, sorry about that, we've got SDOW. Okay, this is short Dow 30. And so the call was for UDOW puts, to buy UDOW puts up here at the top, and then then the call would be SDOW calls. And puts at tops will most of the time return better gains than calls at bottoms. It's just a better trade for options, so take note of that. With this multi-day pullback, it was setting up for at least a technical bounce, working its way back up to EMA4 here at 1572 is going to be the key. Getting above that level and then back above the middle Bollinger Band at 1621. Once it gets above that level, that's when an uptrend can start. That's what happened back here in June when it had a nice run. This was a really good run for SDOW. For it to get that kind of run, it's going to have to turn that middle Bollinger Band and then get above the 50-day simple moving average into support. Okay, thanks for viewing this video. Yeah, we've got the the Nasdaq now. I mean, they're holding up. They're down fractionally. Down fractionally, and yeah, we'll just have to see how it all plays out. So far, politics have not been the big, haven't had that big of a factor on the markets. It would maybe it's going to be about those China trade talks and then the potential for the tariffs on Thursday. Okay, thank you for viewing the video. Appreciate it.